Foreign buyers are bailing on the U.S. housing market.
The two simple reasons: rates are higher and a strong dollar. As the Federal Reserve raised interest rates at the fastest in history, the dollar became stronger. So if you're in another country and you go to trade the currency, it literally now costs you more to buy it. Okay. Now, not all of them are cash. Some of them are financing too. So as the cost of financing in the US goes up, less foreign investment. International buyers, they purchased 14% fewer homes in the US in the past year, which is the least according to the National Association of Realtors since 2009. So that's since like the heart of the recession. So this is a number to know and pay attention to. So the person that says, oh, I'm being beat out by the foreign buyer, statistically that's untrue today. The median price that they're purchasing here in the US is $396,400. What do you think the top 5 countries are that are purchasing from outside the United States? And don't look down at the paper in front of you.
I'm not going to. So I'm just going to guess, okay?
Yeah, please. Yeah.
I'm not going to cheat.
Yeah.
China, Japan, London, Saudi Arabia, and I want to say, what's another Asian country? South Korea.
Perfect. Top 5 countries in order: China, Mexico, Canada, India, Colombia. So
Mexico. Well, that's something we should dig up a little bit. Yeah.
Mexico and Canada kind of makes sense. We're sandwiched between them. China makes sense also. I actually didn't. India and Colombia were not on my list. So out of those 5 countries, which ones were purchasing the most expensive homes and in what state?
Well, I want to just say China as a default.
Yeah, you're 100%
okay,
right. China.
And which state are they buying in?
Yep.
Just one?
Just one.
California?
Yep. So Chinese buyers had the highest average price of $1.23 million in California. And they bought a third of them in California. So if you looked at just the Chinese buyers, a third of what they bought was just in California. Foreign home buyers bought in these states: Florida first, California second, Texas third, North Carolina fourth, Arizona fifth, Illinois sixth. Out of them, what percentage used cash?
Almost all of them?
42% used cash.
I thought it would have been higher.
I actually thought it would have been higher too. And it also means that they believe in our economy. They believe in our area, and they want to park dollars over here.
You don't want to buy over there?
Part of it is true. What are they buying, or the reasons they were buying, was vacation homes, rental properties is what they said. Now also, I just from other research, other articles, I believe part of those Chinese buyers, especially in California, is for California having awesome schools and universities for their kids to go to school there. That makes total sense.
I would not have thought Mexico, okay? One reason Mexico is on here, people that aren't aware, we're having an issue at the border, and immigration has slowed down. Whatever reason, good or bad, it's slowed down. I know people that have told me like, it's harder to just get a visa to come into the United States, Mexicans specifically, and then forget about it if you want to become a citizen. We used to have a lot of workers that would go over the border, work, either whether a day worker or just work in a season, go back home to their families and live their life in Mexico. Because of the border challenges as well as immigration, people are deciding, I'm just going to stay in America. I'm going to bring the family over here. This is specifically related to the issues we're having. Has nothing to do with the Fed, has nothing to do with rates. And so the reason I bring this up is this is one of probably 10 plus variables that's affecting the U.S. housing market, that's making it hard. You know, one of the things I say about why real estate moves slow is because there's too many variables to just like pinpoint it to one. So as the investors, obviously we can be affected by a migration from, you know, the Midwest to the Northwest, right? We can be affected by higher interest rates.
Lack of labor,
which I mean goes back to even something like this. This is such a massive influx, right? When you would think there'd be less buyers because of higher interest rates. Yep. And even if you were international investors, this is kind of like a curveball. It's unpredictable. predictable. And this is why in the economy in general, at the government level, like Janet Yellen Treasury, as well as even in real estate, you need predictability, not volatility.
Yes.
Let's just talk about agents, real estate agents. When there isn't like a clear path to how your business is going to make money the next 6, 18 months, 2 to 3 years, you have to kind of pull back. You might not hire as many people.
Yep.
You might not invest in the same things. Now, you and I both know is like right now is the time to work harder, build smarter, not necessarily bigger. But you see what I'm saying about this is just one variable that wasn't even part of this article that's affecting some of these data points, and it gets crazy. This is why 2020 to 2022, the pandemic, the lockdowns, the supply chain, international relationships, global supply, even the smartest people cannot predict what's going to happen in a year from now. And that's why ultimately it comes back down to principles, long-term thinking. And this is one of the reasons why real estate is so powerful, because at the end of the day, people need a place to live in. Rentals will always be in demand. And appreciation over a long period of time will make you a winner.
The immigration problem here in the United States is massively inflationary, and it's massively hurting affordability in housing. Here's why. People, they try to break this down to one issue, but it's bigger. If you have a bunch of talent, and so I'm talking computer programmers, AI people, nuclear scientists that were sucking, the talent wars is really starting to happen. The new Cold War is the talent war, where all the major economies are hunting for talent. And we need to get our immigration policy focused on sucking hardcore talent into the US. Because if you bring in talent and talent creates innovation, innovation is naturally anti-inflationary. It causes prices to go down. So immigration reform there. Immigration reform also on the skilled labor portion. Getting more labor into the US drives the cost of housing down. What's happening is there's not enough skilled labor currently in construction, so we got to import it. Second thing we need to do, we should bring trades back in school. Show people how being a plumber is an awesome job, being an electrician is an awesome job. Go be a framer. We need to get people back into that. Right now, there's some crazy stats. For every 5 people that retire in the construction industry, like only 1 replaces them. Well, if people in the US, only 1's going to be replaced, you got to recruit the other 4 from outside. You should allow people with a certain amount of investment capital to buy their way in, because of course that buoys up the economy. And last but not least, there needs to be a heart component to this too, where we allow a certain amount of people in who just need to be in the United States.